And to look more closely at the commodities sector, I spoke earlier with Jonathan Barrett, Managing Director with Commodity Broking Services. Jonathan Barrett, welcome to Business Today.
Good morning, Whitney.
All right, let's start with oil. Now, you were predicting it to trade in a range of about, with a target of about $81 a barrel, and it wouldn't break that unless something major happened. Well, something major has happened. So what are your thoughts on this?
Well, Whitney, it is a major event. I think no one really thought what would actually occur. I guess the key at the moment as we focus on Libya is how this contagion will spread to the major oil producers, being Saudi Arabia and Iran. And I think that's the one we've really got to focus on.
Well, it's interesting you say that because there are protests in Iran that have been hosed down. How concerning is this to the oil sector?
Look, it is. It is a major one because you look at number one and number two producer and in Iran, or Saudi Arabia and Iran. But more importantly, when you look at Iran, they're our border onto the Straits of Hamas, where about 30 to 40% of all seaborne oil goes through, and that's only 54 kilometres. So if this does escalate, you have a major event occurring which will restrict the supply of oil to the global economy. So it is an issue, but we've got to be wary. There is a lot of misinformation going around, and that.
Well, how so? What do you mean by that?
Well, we hear stories, and those stories create that volatility, and it's that volatility in the market then creates other moves, and it feeds on itself the whole time.
So what you're saying there then is it's more the psychology of what's happening than real fundamentals.
Yeah, absolutely. Because when you look at it, this fear is driving the market. We have enough oil. That's not an issue at the moment. Where our inventory levels are at record highs, strategic reserves are
But what
full.
about supply constrictions?
It doesn't matter at the moment because we have enough oil and we produce enough oil to placate any form of demand at the moment. If demand would pick up, we'd be okay. Saudi Arabia has 4 million barrels of excess capacity. They've said that, they'll turn the tap on another 500,000, which they've done. They'll increase that. So it shouldn't be too much of an issue.
But it did, and that in fact did bring oil prices slightly lower, but then they spiked back up again.
Yeah, more information that came to hand. Concerns in Bahrain, where, there were more conflict, more protests than we had in Tehran. We had more issues as well. So it's this information which we've got to look through and sort through what is misinformation and what is solid information, and how will that affect the supply of oil.
Given the volatility, the unpredictability, and as you say, it's now being affected by psychology, not fundamentals, as a commodities strategist and forecaster, does it feel a bit futile to try and predict where this is going to go? Well,
it's in your stride. You know that you're looking at an end game here. You can say, well, what effectively is going to occur, and if it does, what's going to happen? What's going to happen to the eastern economies? What's going to happen to the western economies? And that to me is the driving point. Oil at 100, oil at 120. How do the economies affect? We've already seen equity markets now take a bit of a tumble, and that's probably going to continue. Oil goes up, equity markets go down, as this rise in oil prices erodes the benefit of the stimulus packages and austerity programs, and that to me is one of the big concerns we're faced with now.
Now, we heard earlier in the program that Ben Bernanke has said that these high oil prices won't affect the US recovery, provided they don't stay high for long. It doesn't appear that that's going to happen. So what's your view on that? Is he just trying to hose down sentiment over there? I
think he's just trying to hose down sentiment. I mean, at the end of the day, higher oil prices just don't work well with stimulus packages. I mean, that's just a result. But I think he is actually trying to say, well, look, we feel that this concern in the Middle East is temporary. And as it is temporary, it shouldn't have too much of a concern. But it's just the one thing. Higher import prices relate to higher inflation. That is a concern when you have austerity.
And how long it has affected petrol prices? How long until it affects things like food and other sectors?
Absolutely, because it does feed through. A high oil price today will affect what we have to reap in terms of the petrol we pour into the harvester, because that'll all affect those costs. So it actually works downstream. So the high oil price today will still be in the market in 3 to 4 months' time.
Now, of course, another commodity that has broken records, has been pushed to stellar heights, is gold. It appears that it's well and truly going to blow those predictions out of the water. So what are you thinking here?
Well, it was a very large move last night when we broke through those old highs, 14.24, 14.30.
So it put on $20 overnight.
$20 overnight, and it is this groundswell of uncertainty, equity markets under pressure, oil going higher. What we're seeing is people move into a flight to quality.
It's interesting, though, because you do notice that sometimes with a rise in oil, it doesn't necessarily correspond with a lowering of equity markets. They seem to be sort of separate.
Yeah, it is. But this is so once again this contagion. This whole area we're trying to work out where everything goes. You'll notice that the US dollar wasn't bought last night on concerns. Normally that's a safe haven, but we found people go to gold. People move to gold because they feel it is a safe haven. Equity markets under pressure. Well, where do we go? So I think people have poured into gold, and as a result of that, it's broken these highs. And if it remains above these highs, then we can see gold prices continuing to trade upwards of $450, $1,500 even.
Now, we're nearly out of time, but just briefly looking at that ABARE report on Australia's commodities sector, how critical are these warnings that resource companies should limit their exposure given the strength of the Australian dollar?
I think it's very important because we've now got a lot of uncertainty out there, which has primarily come back from the Middle East, which will affect growth. If it affects growth in Asia, it's going to affect the demand for our commodities.
And it doesn't appear that the Australian dollar is going to go lower.
At the moment, she looks very well bid. If it breaks through that 102, 102.20, then we expect it to go higher. But I think at these levels, I think I'd want to be a lot more cautious that I don't spend too much money on infrastructure at these levels.
All right, Jonathan Barrett, always good to talk to you. Thanks for joining the program.
Thanks, Whitney.